Hi everybody, this is Market Watch in the studio with Liam Hulse. In today's release, we'll cover the following topics: why the Federal Reserve lowered the basic interest rate, business activity in the eurozone service sectors, the upcoming decision by the Bank of Canada regarding interest rates, and crude oil reserves in the USA. On Tuesday, March 3rd, the Federal Reserve suddenly and without warning lowered its basic interest rate by 0.5% to 1.25% due to the negative impact of coronavirus on the country's economy. As a reminder, the US stock indices have been in freefall due to the virus, so the regulator was forced to restrain the panic by flooding the economy with cheap money. At the same time, US Federal Reserve President Jerome Powell does not rule out any further reduction in interest rates if necessary. Despite the move in interest rates, selling in US dollar remains moderate. For example, quotes of euro and US dollar currency pair failed to overcome the technical restraint area of 1.1170 to 1.1190. As a result, the risk of downward trend continues to increase, including against the backdrop of a moderate weakening of the euro. Pay attention to the final data and changes in the level of business activity in the service sector for the largest economies of the eurozone. For example, France and Germany. The final data was revised downward, which led to a deterioration in the overall indicator for the eurozone. As a result, this release put pressure on the euro, keeping the euro and US dollar pair from any further gains. Moving to the American trading session, I will draw your attention to the upcoming announcement regarding the Bank of Canada's latest interest rate decision. Given the mass market trend, the likelihood of a rate cut has increased substantially. On the back of this announcement, trading activity in the Canadian dollar can grow significantly before, during, and after the announcement of the rate decision. Quotations of the US dollar and Canadian dollar currency pair are currently range-bound between 1.3315 and 1.3395. At the moment, there are no solid trading signals, but if the Bank of Canada cuts rates, quotes of the pair can break through the upper limit of the marked price range. We conclude today's review with the publication of a report on changes in US crude oil inventories. The increases in reserves will continue to lower oil prices, and as a result may put additional pressure on the Canadian dollar. That's all from me. Make sure you closely monitor the news so you are ready for all the changes in the market.